Good morning, everyone. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from sunny Lake Tahoe. It's a beautiful day. I'm going to go out on a long 10-mile hike as soon as I'm finished with this webinar. Screw the market. I already know what Ben Bernanke's going to, not, sorry, Ben Bernanke, Jay Powell is going to do. Boy, am I out of date. Um, so why bother? Why bother hanging around for the obvious? So, dog days of summer, yeah, markets are doing nothing. Volatility traded down to 14 yesterday, barely trading in the 15s today. It's the VIX is telling you go away and enjoy the beach, which I shall also do since whenever I finish a 10-mile hike, I go down the lake, take all my clothes off, and jump in for a cold swim. These are pictures from my recent trip to Santa Barbara to go visit customers, then go visit my kids in college. This is a Tesla charging station, one of the largest in the country. It's exactly halfway between San Francisco and Los Angeles. So people park here, charge up, and go have lunch. And when they come back, they're fully charged. So, yeah, welcome to my life. Of course, we have a new strategy luncheon coming up on dinner coming up on August 22nd. Um, and I tried to make it a lunch, but nobody's open for lunch anymore. All the good restaurants only offer dinners now. They're closed for lunch because they didn't make any money at it. And I'm seeing this all over the country, kind of disappointing. And even at dinner, you only get five items on the menu. So tickets are $249. We've already had several signups. You can meet other customers, compare notes, see how they're making their money using my service. Of course, the view is spectacular, and just click on this link here or go to the madhedgefundtrader.com, go to the lunches, and click on the Lake Tahoe lunch. You can also click on the transatlantic cruise if you want to. There, they still have lunches. That's another reason for taking a 1 week cruise. Performance, things just continue to go gangbusters. When things are this good for this long, I always get nervous. July is looking like 5.21% on top of a 15 in June. That's almost 21% in 2 months. 50.38% up on the year. 802 since inception, finally topped the 200 level. And of course, 100 and 1.88% trailing 1 year return. And you can see we've just had these massive spikes up in recent trading as we take profits on all our positions. And that takes us to 51.53 average annualized return for 18 years, more than double or almost double the S&P 500. Uh, the profit predictor has been stuck at high levels for the longest period of time since this index was created. And I'll show you what that looks like. There it is. Yeah, stuck it a long time at the top like this. Very risky situation. We could have a dive back down to the 50 level anytime. So we are moving to 100% cash position with the August 15th options expiration, and then wait for the market to do something. If it goes down a lot, we'll buy it. If it goes up a lot, we'll sell it. Play both ways. Okay, so two positions left, 80% cash. We have a long in Wells Fargo and a short in Tesla. And this is wrong. We took profits on Wells Fargo on Monday. We still have a long in Nvidia, so I'll have to correct that after the webinar. But, net position zero, great low risk position to have. cash position 80, and everything goes our way, which it should, we'll be up 52.19% on the year. So let's go to the first question of the day and go ahead and get your question. Uh, Someone's asked me how long for a full charge on the Tesla Model X. Answer 30 minutes now with the new 250 volt chargers. And that's barely enough to have lunch and get back. By the time you walk to the restaurant, it's almost already charged. And then they bill you for excess time at a charger if you're not being charged. They charge you like $1 a minute or something if you're hogging a charger and you're fully charged. So, uh, not the way it used to be, is all I can say. Fortunately, I got free charging for life when I bought my car because Tesla was desperate to sell anything in those days. Okay, stocks are now very high risk levels due to an increasingly unstable world. Half the economy is booming, the other half is in a depression, essentially. And when you see the stock charts, it's obvious which one is which. Bonds approaching 2025 lows, yields new highs. Uh, and even if the Fed cuts interest rates, bond yields are expected to remain high. New budget bill passed 5 trillion in debt ceiling increase. Safety assets like gold, silver, T-bills are flatlining, with crypto bleeding off capital for speculative activities. Oil dead on the water on recession fears. And even if we don't get a recession, global economic growth is slowing dramatically. And that's also obvious in the charts. US dollar at 4-year lows, Bitcoin at new high at um, 123,000, missed a couple digits there. Okay, so let's go to another question here. Uh, d- d- um, okay. We just got here's a question here. We just got the GDP print at 3% annualized or 0.7% on the quarter. How come we didn't get a much lower number? Because all economic statistics this year are going haywire because there's some massive swings in the economy and the international trading situation. Almost all of the growth in the recent quarter came from a collapse of imports. And of course, when you do the GDP calculation, you subtract imports and you add back exports. So, with people having front run the tariffs in the first quarter, they now have enough inventory for the whole year. So, of course, you would expect a collapse in imports and tariff revenues for the government. So, expect that to come in the near future. Um, it means while the GDP print is okay, the actual underlying data behind it is incredibly weak, which is why jobs are collapsing and business worldwide is shrinking. Um, Domestic demand grew by the slowest rate in 2.5 years. Inflation rate rises by 0.1% to 0.3% to a 2.7 annual rate. Producer price index comes in flat. Retail sales pop. Global PMI rises. Fertility rate, not when you only get this number once a year, all-time lows according to the CDC. Uh, 1.66 children per couple. The replacement rate is 2.18. And of course, I did my part with 5 kids. So go out and go out there and procreate is all I can say. That'll create a stronger economy in 20 years. And if you don't, we'll get a weaker economy and a bear market in 20 years. That is the connection. Um, would you sell NVIDIA shares at these levels and keep some powder dry in case we get a sell-off? I would. Jensen Wang is selling NVIDIA, the CEO of the company. He sold about $1 billion worth so far. So he thinks it's time to sell. If you sell like half your position, even a 10% correction will give you an opportunity to make a lot more money overall. And the other way around this is you write out of the money calls. So let's see where NVIDIA is the second, and I'll tell you what you should be doing. And by the way, almost every professional in the industry is doing this. I haven't traded NVIDIA for a while. We're at 178, up $3 today. So you might want to sell short the 200 calls, take in the premium income that will lower your average cost and reduce your volatility. And you should be doing this every month after we've had almost 100% move in 4 months in NVIDIA. Okay. Okay, let's move on here. Here's the GDP. You saw the big downturn in Q1 when people front ran their imports for the entire year to try and get ahead of the tariffs. And then here, the 3% comes from people dialing back their imports now that they have full inventories. That does not augur well for the rest of the year. And that's why a lot of people, although we ended up with a, uh, let's see, I don't have my calculator in front of me, but about a 0.3% economic growth in the first half, we may get zero in the second half for a near zero full year. And the stock market is telling us that by flatlining at the top, doesn't have any more incentives to go higher. Here is the market timing index sitting at a high and at a market timing index of 69, where it was this morning. That means you have a 31% chance of making money on your next trade. That's very low. You want it more like an 80 or 90% chance of making money on the next trade, and that's how the market timing index works. This is the charging stop. I don't know what the heck this is. But they had a snack bar at the end where I could get some lunch. So this is in the middle of nowhere, Kettleman City, California, dead in the middle of the desert side of the Central Valley. Weekly jobless claims down 4,000 to 218,000. And we finally hit the coast at Santa Barbara, and there is that beautiful blue ocean. Um, okay, next question here. Let me go over to the question box. Get your questions in. Um, how many months out should I do sell short the NVIDIA calls? Always do the front month. We only have 2 weeks left in the August expiration, so there's no money left in that. But I bet you if you go out to September, you get a very generous premium on that. And if somebody could look up the NVIDIA September 200 calls, tell me the price, and I'll go ahead and post that so people can know what they're getting. And remember, um, uh, buy sell short one call option for every 100 shares you own. Remember, there's a 100 to 1 multiplier on all these options. So you want to perfectly hedge your position. So if you rise above 200, first of all, you think you died and went to heaven. But second, you have a perfect 1-to-1 match between your options exercise into shares and the number of shares you have. You don't want to take any accidental net long or short positions by mismatching your shares versus your option short. Um, Here's another question from Lawrence. The Markets have historically performed poor in the second half of the year, second year of the presidency. Are we headed for a crash next year? Well, there are a lot of technical analysts who think we could be headed for a crash next year. And I'm meaning not a little one, not a 20%, but more like a 50%. We are 40 months into this current bull market, which is pretty long by bull market standards. Uh, and if the Fed doesn't cut interest rates at the end of the year, then you could get a serious stock market crash. The only thing levitating the market right now is AI and the prospect for interest rate cuts. So if those don't show, then it could be downside time for the stock market. And that's why I'm just trading month to month right now. The long-term future is so unpredictable that you're not willing to take your retirement funds and make long-term bets at these levels. Um, when the SPY was at 4,800, that's another opportunity to do that. The last opportunity up here, 63, 6,400, no thank you. Um, And Randy put up Netflix September 200 calls. I need the NVIDIA 200 calls. How much can I get for those? Would you consider a put spread in GM? Actually, I consider it almost every day. And then I tried to sell the recent rally, and then the trade deal with Japan came through, which put only a 15% tariff on Japanese cars. And of course, the stock dropped 10% that day. So the outlook for the auto industry under this administration looks terrible. For some reason, the president seems to hate Michigan. Almost all the policies are anti-Michigan or anti-Canada, which is just across the river. So, um, yeah, I'd be willing to short GM on a rally, do a put spread, do something like a 65-60. Okay, NVIDIA September 200 calls you can sell right now for $3.50. So that is a decent amount of premium to take in for 6 weeks. And that would effectively lower your average cost by $3.50 if we don't top 200 in the next 6 weeks. So that looks like a good trading idea. Okay, so let's look at the um, let's see, do stocks up 26% in 4 months. Not a place to buy. Don't get more bullish the more the market goes up. Trillions of dollars in government money about to hit the market. You can't sell it short either. Stock rotation, but not a sell-off. And of course, the natural rotation would be out of tech into interest sensitives like banks, small caps, home builders, bonds, and REITs. And certainly the banks are buying that story right now. Stock market momentum is stalling. U.S. stocks are trading near record highs heading into these uh, second quarter earnings season, but with markets historically expensive and reliant on the performance of tech stocks, um, a lot of managers are getting very cautious now, riding out of the money calls and buying put spreads. Speculative activity hits the highest level in history, worse than the dot-com bubble top and the just before the financial crash, says Goldman Sachs. Meme stocks are back. Open Door up 235% in a week. Coal's up 38% in a day. Uh, Trade war cuts $1 billion out of General Motor earnings and will continue to do so. They have to shut down their cheap factories and ramp up their expensive factories in the US. Not good for profits. Um, Historic market concentration bodes ill for future gains. We now have 40% of total market capitalization in 10 stocks, and that is double the dot-com bubble top level when it was back at only 20. Okay, of course, if you don't want to play 4.3% on 90-day T-bills, not a bad alternative. A lot of people I got out of the market in February, are happy to stay out, don't care if they missed the last rally. They can sleep at night at 4.3% and not worry about what the president's going to say the next day. Again, very high levels. We are at all-time highs right here. Here are potential backup points right here, here, and here. Um, with the amount of liquidity around, I don't expect us to challenge this lower level, at least not until next year. Okay, so let me get these messages out of the way. Here is momentum. Flatline for a month, not good. Flatline for a month here, and just a 1 week gap up. So that is a sign of a very toppy market. Okay, here's the pro shares at a low, the SDS. That's your hedge against declines in future markets. We've come down from 28 to 16, basically, almost a half. VIX, we hit 14 yesterday, back into the 15s today. Very low levels of VIX, very high risk for the market. After you get long periods of this down here, what happens? You get this and then this. And here's the short VIX. Boy, should I have hung on to that. I bought it at 32, sold it at 38, thought I was a genius, and of course it went to 45. Um, Dow also flatlining at the top, not a healthy situation. And the 50-day is starting to roll over. Russell 2000 flat, just not performing at all. They're not believing any interest rate cuts are happening soon. NASDAQ all-time highs. Uh, okay, this one we got that. Okay, China new highs for the year, right there on a 5.5% GDP growth. Japan new highs for the year. All of the foreign plays are still working. Europe kind of flatlining here at the highs. That may have peaked out for the short term. German DAX new all-time highs. Emerging market new highs. And here's NVIDIA. NVIDIA hit a new all-time high yesterday. So, and today again. So let's check for any questions. Okay, got that. Microsoft, yeah, just on an absolute tear. These are all the big AI plays. Those are the only things that are really moving right now. Meta flatlining for a month. Apple can't get out of its own way. No AI. Um, Google, major AI player, and Waymo is expanding across the country. Amazon also doing well. Tesla, long coiling move. Will it break up or down? My bet is that we break down and challenge the summer lows, last summer's lows. Um, and again, sales awful, brand destruction, no profits from robots or AI for many years. Netflix is selling off, but we're at major support levels. And again, this is just pure profit taking from a really enormous gain of 50% since April. So I expect it to stabilize here, and then we can take our max profit on our current call spread. Palo Alto Networks just bought CyberArk, major competitor. They sold off on the news. It's probably a buy down here. This is one of the handful of sectors that is just going to grow explosively over the next decade. You want to buy every dip because as AI develops, uh, the cure also develops, which is cybersecurity software. AMD new highs, Salesforce, and this shows you how tech stocks differentiate between AI providers and AI consumers. It's a software company. It uses AI. It's not creating it. As a result, the stock is going absolutely nowhere. Same with Adobe, Snowflake flatlining. Uh, let's see, the ROM new highs, and that's approaching a triple from the August low, April lows. It's amazing. MicroStrategy, again, flatlining on they keep buying more and more Bitcoin and the stock's going sideways. Lifeguard hut at the beach in Santa Barbara, beautiful place. Maybe I should go move there. Second half of the barbell. Let's see if we have any more questions that are coming in. Here's one from Drew. SMR, Oklo, and CCJ have just had huge moves. Should we stay the course? Regarding the nuclear play, absolutely. I mean, they haven't even built any new nuclear plants. The potential is for them to build 80 in the US. So hang on to your nuclear plays. It's uh, new or nuclear, as George Bush used to say. And they have a long ways to go and will become major contributors to the power grid. I think right now the US is 20% nuclear. That's all from the old 1950s design plants. The new generation basically is three generations ahead of the old design. So that will be a great play. Keep all nuclear plays. Um, John is asking, any chance that bonds will rally among the lower interest rate plays? Long bonds will rally, but not very much. The expectation is that even if the Fed cuts by a full 100 basis points in the next year, uh, long bonds may only drop from 4.3% to 4.2. I mean, you'll get almost no benefit from cutting interest rates. And of course, most corporations borrow somewhere around the long bond rate of 4.3. So uh, any action by the Fed could be muted by the fact that nobody wants to buy long bonds anymore. Not foreign governments, not central banks, not American wealthy, nobody. So we're not doing anything in the bond market right now. The volatility is just too small to trade. Hey, Goldman Sachs, we're going to go through an absolute tear here on financials, which are all trading at the high for the year. Bank of America, Citigroup, they believe in deregulation, but these are all also falling interest rate plays. And they will take advantage of falling rates because they do a lot of their borrowing at the Fed funds rate or slightly over it. Interactive brokers on a tear. Berkshire is not. We're still losing the Buffett premium. So far, it's taken us down 80 points. And I'm going to wait until we get a solid bottom on this. The portfolio is still good. BlackRock, new highs. Metals and mining, great run here. Boeing, buy the rumor, sell the news on the earnings. Still losing money, but only half as much as they used to. Still, I'd be buying Boeing on dips. Boeing makes almost the only manufactured product that foreigners want to buy. They're not buying GM Suburbans in Japan, where the car is wider than the street. Surprise, surprise. And the steering wheel is on the wrong side. There's General Motors. Two chances to sell short, missed them both. I'm just staying very risk averse right now. And this is another recession indicator. When economies slow, people ship much less, and we're down to the April lows in UPS. Sorry, folks, but this does not bode well for the economy. This is in the half that's not performing. Uh, Caterpillar, new highs. Again, look at the housing plays. The lower interest rate plays are moving. Deere and Company is holding up. Freeport holding up. Walt Disney holding up. Industrials, new highs. Union Pacific just did this monster takeover of Norfolk Southern. We're running out of railroads to buy. There's only a couple left. Used to be 5,000. Let's see. But again, it's another recession indicator. People ship a lot less in slow economies. Walmart, again, hobbled by tariffs. Costco, hobbled by tariffs. Delta Airlines, collapse in international travel, pulling down the stock. Transports, new highs. Healthcare, sitting on the bottom, waiting for the next election, basically. Amgen, trying to crawl off the bottom. Visa, earnings beat, but guidance disappoints. When economies slow, credit card usage slows, and that is why we're getting no movement in Visa. Great company, but they're looking at a weak second half. Consumer discretionary, new highs, and there are the legendary California lifeguards. Boy, I didn't look that good when I was 22. Um, Bonds, digestion problem. Let's go to the questions. Um, if Powell drops rates sharply, like Trump wants, what would be the effect of the economy and inflation? Well, the economy will stop shrinking for sure. Um, it'll help the non-AI half of the economy and the stock market. AI doesn't need lower interest rates, and that's where all the action is happening now. All of these massive um, investments being made by the AI companies are entirely cash, in-house cash financed, and also help with tax subsidies. So they don't need lower interest rates because they don't borrow. If anything, most of the big AI companies are net lenders to the system, like Apple. Um, so no effect on AI, really. It's everything else that stops doing so horrible that does borrow. And housing definitely would help, although the effect may be muted if long bonds don't go up in price and interest rates don't drop. Okay, bonds appear stuck on the bottom. 5 trillion new government spending is the big overhang. Future interest rate cuts are beckoning. No chance for July, which is out in an hour and a half. But September, December is a 50-50 chance. I vote for December. Bonds hate the national debt at 42 trillion, which we could be at by the end of next year. Bonds investors are moving away from longer dated treasuries. National debt service is top defense spending for the first time. And that's with defense spending going up 25% this year to a trillion. Um, so avoid all interest rate plays for the short term. Longer term, they may do better. And you'll see that in some of the charts. Flat line here for 4 months on bonds, flat line on yields, junk bonds rising, and nobody knows why. If the economy is weak, you usually want to avoid high risk junk bonds, but it ain't happening. People are piling into junk bonds just to get a 150 or 200 basis point premium over treasuries. Nobody has ever seen this before. I bought junks down here and then came out once it looked like we were in recession. Muni bonds going nowhere. You don't want to own these during tax cuts, which makes tax-free bonds much less attractive. Emerging market debt, new highs. TBT, sideways. Annaly Capital Management does benefit tremendously from interest rate cuts. It is moving. Of course, they are able to lend at enormously high rates, and that is the reason. Yeah, just checking out the wildlife on the beach at Santa Barbara looks pretty good to me. If you wondered why the picture is so grainy, it's because I'm using the maximum telephoto effect on my iPhone. Foreign currencies, okay, no dollar friends still. And let's go to the questions. Starbucks posts another sales decline. What gives? Because uh, I thought their business was indestructible. Well, it turns out their business is destructible, and they're being badly affected by slowdown in sales in China, where there's a big anti-American sentiment right now. And of course, Starbucks has thousands of stores in China. Also, they're not exactly a new idea. You know, when they first came out in the 80s, I thought, woohoo, finally decent coffee in the United States. That's not such a big deal anymore. And they're getting expensive, and the service has gone downhill. And a lot of their shops are kind of shop worn and seedy now. So, what may have killed them in California is when they required the amount of calories be posted for every drink. Of course, when I saw that my favorite drink was 600 calories, I never went back again. Okay, so foreign currencies, 4-year lows, sell America still in play. May see another 20% decline in the dollar if the Fed cuts interest rates. Uh, and of course, Trump is promising us 300 basis points in rate cuts. But then Trump promised me that condo in the swamp in Florida would be a great investment. Populist Japanese election win tanks the yen. No one really knows what this new party is about. You basically have had one party rule in Japan for 75 years. So this is going to be new. Buy all the foreign currency plays on dips, and you'll see the reasons why. Aussie dollar, Japanese yen, and that's the sideways move from the election. Euro new highs, British pound new highs, emerging markets new highs, and that's the place I hang out at in Santa Barbara with the spectacular ocean views. I think it cost about $20 million to build. Energy and commodities dead in the water. Let me go look to the question box. Is now a good time to invest in multi-unit living complexes in decent metro areas? I would say yes, because they are an interest rate play and they will rise in value as interest rates fall. That sector is a highly leveraged sector, very dependent on borrowed money. So if you can find some of the housing REITs, those are also going to be buys. You know, this whole area falls under the REIT category. So it's definitely a buy down here, betting on interest rates sometime. Okay, oil going nowhere because of recession fears. U.S. drillers cut rigs for the 10th week in a row. Excuse me. OPEC increases production by 550,000 barrels a day. The price war continues. Budget bill kills the effort to restore the strategic petroleum reserve. If there's another cutoff of oil from the Middle East, we will run out of gasoline. This administration is enacting policies like there is no tomorrow, like the world is going to end. Um, U.S. crude inventories at 1-year low. Perfect setup for a short squeeze in oil. Look for energy plays to hit new low. Copper all-time highs off of the 50% tariff. And I visited the largest copper mine in the world yesterday, and I'll tell you all about that in the next webinar. Nuclear plays still hold with a huge deregulation tailwind. Um, Here's another question. Will American manufacturing return to the US or not? Absolutely not. Who wants to go from $7 an hour to 70? That is the choice. If you have country factories in both Mexico and the US, like all car companies do, it makes sense to max out your production in the US in existing factories and run down your production in Mexico. But absolutely, people will not build more factories here, um, which may become useless by the time they're finished in the next administration. Um, okay, is this the end of European car manufacturers? No, there'll always be a demand for quality, but you may see a lot of consolidation. Europe has way too many car makers given the size of the market there. And they're having to deal with Chinese competition now. So you could see big consolidations in every country, um, in Italy, in Germany, in Sweden, and France, where all the big car makers are, and in England for that matter. In fact, that's already been happening in England. Okay, let's move on here. Oil going nowhere. USO nowhere. Um, Energy Select nowhere. ExxonMobil sideways. Occidental sideways, waiting for something to happen. Nat gas, new lows. Um, and by the way, the Europe uh, trade deal contingent of on 750 billion in gas purchases from the United States has no chance of happening. And a lot of these trade deals, you'll get a verbal tariff rate from Trump, a promise of future purchases, which never happen. That's what happened in the last administration. Foxconn promised to build a $20 billion factory um, in Wisconsin. And also, China promised to buy huge amounts of soybean, never happened. And the ground was never struck for building that factory. It got canceled. So you can expect the same to happen this time, except on a much bigger scale. CCJ, fantastic run, one of our favorites. We have leaps on this, which are at max profit now. Keep buying the dips. Great interest rate play. Here's a nuclear play. Vistra still has a ways to go. And these are some local Canadian geese I found on my trip. Precious metals consolidating. Let's see. Uh, Ronald is asking, do you think China has an overcapacity problem compared to their own consumption? And how is that affecting the economy? Absolutely, China has an overcapacity problem. That's why they're dumping products overseas at cheap prices. That's why we have a 100% tariff on Chinese car imports in the US, which Biden imposed. Um, they uh, are the preeminent export economy in the world, and they overdid it. And they're trying to stimulate domestic consumption to eat up some of that production. And so far, they have not been successful, and that has been a major drag on the Chinese economy. Is if copper is a good play, why is FCX going sideways? Well, copper just nearly doubled off of the uh, April bottom, so that's a good reason there. Um, but I would look to buy any dips in FCX, Freeport McMoran, because the outlook for copper for the long term is spectacular. We're entering peak copper demand, and it's just a matter of digesting recent enormous price gains. Okay, Bitcoin breaking out is stealing gold's thunder, speculative money chasing new highs in crypto plays. At the expense of gold, traders have been rolling out of hedges into stocks as they rise. Silver hits a new high for the year. Uh, AGQ leaps at max profit. $50 here we come. Target for gold is 5,000. Okay, and let's see. Okay. Okay, gold looking like a 4 month sideways move ever since the April 9th bottom. So that shows you how people are abandoning gold as a hedge as long as stocks go up. What happens when stocks go down? Gold takes off and goes to a new all-time high. So, and we may get that in September. We may get a September sell-off going into October. Then gold easily gains another 10%. Um, okay, here's the GDX flatlining, Barrett Gold. Actually, that symbol is now G. They changed their ticker symbol. Newmont Mining, new highs. iShares Silver Trust, new highs. Silver Miners, new highs. Wheaton Precious Metals, new highs. Platinum consolidating, and another wildlife picture on my trip. Okay, let me check the questions. Uh, do you think 50 is $50 for silver is likely this year? No, but it could be next year's business, especially if we get interest rate cuts and a market sell-off. Okay, and what else do we have? Here's a question. Are you raising your SPX forecasts on the stronger than expected GDP forecast? No, because while the headline number looks okay, you dig into the numbers and it's much weaker than we expect. So no, I'm not raising my forecast, and I'm looking for 6,500 for the top for the market this year. New home sales come in weak. Contract signings increased by 0.6%. Uh, we're still in a Great Depression in housing. U.S. home builders are struggling. Existing home sales dropped 2.7%. Uh, Sales are unchanged on a year-on-year basis. Uh, 1.35 million units are for sale, up 15% in a year, and a 4.7-month supply. Median home price 435,000. Average house now spending 27 days on the markets. Uh, we finally got a down number in the Case-Shiller, down zero point 0.3. That hasn't happened since January of 23. Um, and the big inventories are finally starting to drag on numbers. New York's still up, Chicago up, Detroit up, but Tampa is down, San Francisco and Dallas all down. Crown Castle International just rocketing as an interest rate play. And we also have a leap on that, which is at max profit. Uh, Here's the home construction. Interest rate plays are waking up for sure. And look at D.H. Horton up 20% in a day on average earnings. So stocks, you want to stand aside, bonds, sell rallies, commodities, buy dips, currencies buy dips, precious metals buy dips, energy stand aside, volatility, uh, sell over 30, and real estate. I'm saying buy the dips now after a year of sell rallies. So that is the change of the week. Uh, okay, let's see if we have any more questions here. Let's take a look. Okay. Next webinar is July 30th. Well, make that August, and I'll send you the email. It's in 2 weeks from Incline Village, Nevada. And that's me typing out a story when I was a young journalist on an IBM Selectric typewriter. So this is John Thomas, the Mad Hedge Fund Trader, signing off for today. One more sunset at Lake Tahoe. Go ahead, good luck, and good trading.